तो डेली अप डाउन मारा है गामा से यार। कैसी बात कर रहे हो लाडलो।
गामा।
अरे मने लगा दोनों के दोनों शहरी पपलू वो दिखे। अरे जैसे सिटी को अल्फा बोले हैं, टाउन को बीटा बोले हैं, वैसे ही विलेज को गामा बोले हैं।
भाई आपकी तो जमीनें वमीनें होंगी वहाँ।
हाँ जमीनें हैं यार, मेरे नाम पे आ रही है तकरीबन तकरीबन लमसम लमसम ये आ रही है 450 वर्ग मीटर।
और उसमें फसल भी होती
अरे
होंगी।
फसलें भी होती हैं यार, अभी जैसे वीट की फसल थी इस बार और शुगर की थी। बाकी जैगरी की नहीं हो पाई यार इस बार ना, क्योंकि वहाँ पे फ्लड आ गई थी काफ़ी सारी गाँव में। होका और खाट नहीं देखे, कब्जा के पलाट नहीं देखे,
Okay, I hope my voice and everything is working fine.
लागे हरियाणी नहीं गए दोनों के दोनों। हाँ मित्र। अरे तो महापंचायत कराना भाई, मैटर तभी सोल्व होगा ये। अरे कैसी बात कर रहा है लाडले यार, इनकी मोम को पिक कर लेंगे बिना ओटीपी के। ठीक है ठीक है। हाँ बता दियो, सुन दो ही बात बोलियो उसको।
अरे ये चल रहा है क्या बैकग्राउंड में? That wanna be desi. Okay, that was fun. YouTube में कोई शॉर्ट चल गया था बैकग्राउंड में. Okay, just give me one sec. Am I live? Am I live and am I live? YouTube में कोई शॉर्ट चल गया था बैकग्राउंड में. Okay, just give me one sec. Am I live? Am I?
देखे लाग
Okay, I hope.
अरे फसलें भी होती हैं यार, अभी जैसे वीट की फसल थी इस बार और शुगर की थी। बाकी तो डेली अप डाउन मारा है गामा से यार। कैसी बात कर रहे हो लाडलो।
गामा।
अरे मने लगा दोनों के दोनों शहरी पपलू वो दिखे। अरे जैसे सिटी को
Damn. Okay. Okay. All right. Alrighty, right. ठीक है, so everything is working fine. We can go ahead. That is fine. All right. Let me start a poll, maybe. I don't know it. What exactly I don't know. Road. Okay. What do I don't know? Am I pronouncing your name correctly? Rod. Welcome to the live stream. I was just checking the audio if you are talking about that. Hmm. Okay. I'm not getting your point. You don't know it, then there is a question mark, then. Alright. Okay, I hope my voice and everything is fine. I'm not understanding your question, what exactly you are trying to ask. So, can you frame it in a little bit simple manner? Alright, so that I can understand. So, basically, welcome to the live stream. I hope you are having a good day. If not, then I wish you a great day ahead. Alright, so basically, what I'm doing over here, let me give you a brief summary about it. So, there is this book by John J. Murphy, and the name of the book is Technical Analysis of the Financial Market. Look, something isn't different. Something isn't different. Okay. Alright. Okay. So moving ahead. Yes, I was talking about the book that is The Technical Analysis of the Financial Market by John J. Murphy. And we are on the 7th chapter where we are talking about volume and open interest. I am not gonna explain a lot of things over here because I am also reading it for the first time. So the general agenda is I'll read it out and I'll in between if I'll feel like explaining things I'll explain, and if you are into interaction, if you want to ask anything related to stock market and trading, then we can discuss it. See, for me also it is like a learning curve, right? So it's like if you are into stock market and related things, then you can check out my channel and you can give it a subscription, and you can subscribe it, and also you can drop a like if you want it. Okay, only and only if you are into stock market. So that's the terms and condition, right? So now in front of us there is this chart which is basically so the last topic that we have covered in our last live stream was related to open interest. So if I'll quickly summarize it, so if the open interest is rising and the trend is also going in the upward direction, that means the trend is strong and the market will continue in the up move. And thereafter, if the open interest is decreasing but the market is going up still, that means the market is bearish. That means you can expect a reversal sooner or later. Then the third thing being, if the open interest is rising and the market is in downtrend, right? So in that case, the market will be bearish, and opposite to that, if the open interest is declining and the market is in the downtrend, again the trend reversal can happen, and also the market can become bullish sooner or later. At least it can become trendless or sideways in upcoming time. So that was the general agenda or general idea that we have covered in the open interest, and except that we have discussed about the volume part as well. Now from this point onwards we are going to explain things. The first thing, okay, talking about this chart, so here this is the general case where the prices are falling and the open interest is rising. So if the prices are falling and the open interest is rising, then this is the case that the market is bearish in nature, right? So this example is also telling the same thing. The downturn in copper during the summer of 1997 and the subsequent price decline was accompanied by rising open interest. Rising open interest during a price decline is bearish because it reflects aggressive short selling, right? So this is the example of the same. Now other situation where open interest is important. So that means it started to be going up of the copper. So no, it's not like that. Let me explain it once again. Since we are talking about open interest, so open interest is like how many contracts are still present in the market. That means how many people are still participating in the market. Either they can go short or they can go long. So if we'll like calculate either side, we'll get to know about the open interest. So here the copper prices are falling and the open interest is still rising. That means the sentiment is for the copper prices to fall down further in the future. That means if the open interest is increasing and the prices are falling, then the market will be bearish. Bearish is the term that is used when the market is falling down. So the copper prices will move further in the downward direction. So that's the basic agenda that we are trying to find out from this particular scenario over here, where the open interest is rising and the prices are falling. So this is a classic example of short selling, and the market trend will be known as bearish in nature. So yeah, that's that. Is it clear? Understood? Okay. No, it is not going up, it is rather going down. So the prices will fall further down. Is it clear, Rod? I hope you're still here. Okay, let's move ahead. I think you're new to the channel, so please check out the channel once, and you can check out the live stream, like the last live stream as well. So that's the 4 point that I'm trying to summarize over here. If the open interest is rising, then the trend is uptrend, then it will be bullish in nature. If the open interest is declining and the trend is uptrend, so it will become bearish. If the open interest is rising and the trend is downtrend, so it will become bearish, right? That's the example of copper that we understood in the last diagram. Then there is this declining open interest and the trend is downtrend, so it will become bullish. So trend reversal is happening over here. Okay, I hope it makes sense. Now moving ahead, other situation where open interest is important. In addition to the preceding tendencies, there are other market situations where a study of open interest can prove useful. Toward the end of major market moves where open interest has been increasing throughout the price trend, a leveling off or decline in open interest is often an early warning of change in trend. So end of the major market moves where open interest has been increasing. So open interest is increasing throughout the price trend, a leveling off or decline in open interest is often an early warning of a change in trend. So if the market trend was uptrend and the what I can say, the open interest was also rising, but later on the open interest started falling off. So it is an early sign that the trend is going to reverse, and sooner or later it can become a downtrend, right? It can become sideways or trendless market for a while, and then it can move to the downtrend. So that's the possibility. That's like the early warning sign that we are getting from here. Okay, now a high open interest figure at market tops can be considered bearish. High open interest figure at market tops can be considered bearish if the price drop is very sudden. This means that all of the new longs established near the end of the uptrend now have losing positions. Their forced liquidation will keep prices under pressure until the open interest has declined sufficiently. As an example, let's assume that an uptrend has been in effect for some time. Over the past month, open interest has increased noticeably. Remember that every new open interest contract has one new long and one new short, right? So that is what open interest is. Open interest is comprising of one long and one short in it. So together they are combining, and they are termed as one open interest or one contract. Suddenly prices begin to drop sharply and fall below the lowest price set over the past month. Every single, so basically it broke its lower like lower low, or basically it broke its last low. Every single new long established during the month now has a loss. So if the market is now started coming down, so whoever bought it at high will be in a losing position, right? So the forced liquidation, if they are in a losing position and the market is still falling down, so what they will do, they want to cut short their losses, and for that what they have to do is they have to close their position. So if a buyer will close its position, he or she will have to become a seller, and it will be other way around as well, right? So if there is a seller and he or she wants to close its position, so he has to become a buyer, right? So that's what happens over here. If a buyer is in a losing position, to sell or to liquidate its position, what it has to do is it has to liquidate its position and it has to become a seller for a while, right? So the market, if the he will also become a seller for a while, then it will favor the downtrend of the market. Now the forced liquidation of those longs keeps prices under pressure until they all been liquidated. Worse still, their forced selling often begins to feed on itself, and as prices are pushed even lower. So for an example, let's say the market was at 50, so somebody bought it at 50. Now the prices started falling down and it reached 40. So someone who bought at 50 is already in a loss of 10 rupees or dollar, or whatever the situation is, right? Now if it will further go down from like 40, it became now 39, so the losses are increasing. Now it became 11 rupees loss, right? So the person who bought at 50 will decide to close its position, so he will sell at 39. He will sell at 39, that means he will become seller at 39, which will further make the prices go further down. So that's what is happening over here. So they are pushing the prices even lower, causes additional margin selling by other longs and intensify. See, if the other person is also observing the same, right, and other person will also start selling, so the price will go further down and intensifies the new prices decline. As a corollary to the preceding point, an unusually high open interest in a bull market is a danger signal. Unusually high open interest in a bull market is a danger signal. Okay, now if open interest build up noticeably during a sideways consolidation or a horizontal trading range, the ensuing price move intensifies once the breakout occurs. Okay, this only stands to reason. The market is in a period of indecision. No one is sure which direction the trend breakout will take. The increase in open interest, however, tells us that a lot of traders are taking position in anticipation of the breakout. Once that breakout does occur, a lot of traders are going to be caught on the wrong side of the market. Let's assume we have had a 3-month trading range and that the open interest has jumped from 10,000 contract. This means that 10,000 new long position and 10,000 new short position have been taken. Prices then break out in the on the upside and new 3 months high are established because prices are trading at the highest point in 3 months. Every single short position, 10,000 of them initiate during the previous 3 months now shows a loss. The scramble to cover those losing shorts naturally cause additional upside pressure on prices, producing even more panic. Prices remain strong until all or most of those 10,000 short position have been offset by buying into the market strength. If the breakout had been to the downside, then it would have been the longs during the scrambling. Makes sense. Makes complete sense. Right. Okay, cool. Now, moving ahead, if I'll simply explain it, what the author is trying to convey over here is, let's say the market was in a sideways move. Can I get some space to explain? Okay, let's say this. Okay, so the market was in an uptrend earlier. Now, from the past 3 months, it was in a sideways or trendless zone. That means it is making similar highs and similar lows, right? So in this case, we'll say this is a sideways market or trendless market. So this is a sideways or trendless market because we don't know where exactly it will move. So we have to wait for a breakout. It can be in the upside, it can be in the downside. So basically, let's say if the open interest is increasing in this case, as in the example, it said 10,000 new people added their position, right? And the breakout happens to the upside. So if the breakout happens in the upside, the people who decided to went for the downside trade, so basically the shorts, the people who were favoring the downward trend will start losing their money since the breakout had happened to the upside, right? So as they started losing money, they will close their position. So they are sellers. To close their position, they have to become buyers, right? So if 10,000 people will start closing their position, particularly sellers will start closing their position, they will become buyer, they will add on to the buying pressure and the market will move further upside. Similarly, if the position was reversed, let's say there were a downside, what I can say, breakout that had happened. So the people who went for long, so the 10,000 buyers will start losing money. So they will decide to close their position. So buyers, to close their position, they have to become seller. And if they will become seller, so it will add to the selling pressure and the market will move further down. So that's the whole scenario. That's the whole point of rising open interest, ultimately favoring the trend in one way or another. Okay, makes sense. Now, against, okay, that was the third point, right? The early stage of a new trend, any new trend immediately following a breakout is usually fueled by forced liquidation by those caught on the wrong side of the market. The more traders caught on the wrong side manifested in the high open interest, the more severe the response of a sudden adverse market move. On a more positive note, the new trend is further aided by those on the right side of the market whose judgment has been vindicated and who are now using accumulated paper profits to finance additional position. It can be seen why the greater the price, the increase in open interest during a trading range or any price formation for that matter, the greater the potential for the subsequent price move. Right. Okay, makes sense. Fourth point, increasing open interest at the completion of a price pattern is viewed as an added information, confirmation of a reliable trend signal. The breaking of the neckline, for example, of a head and shoulder bottom is more convincing if the breakout occurs on increasing open interest along with a heavier volume. The analyst has to be careful here because the impetus following the initial trend signal is often caused by those on the wrong side of the market. Sometimes the open interest dips slightly at the beginning of a new trend. This initial dip is the open interest can mislead the unwary chart readers and argues against focusing too much attention to the open interest changes over the very short term. So when we were starting this chapter, no, this open interest and volume chapter, we understood one very basic point that volume and open interest, both of them are nothing but confirmatory indicators. So our primary indicator is again the price. The moving price is the primary indicator. So if the volume and open interest, both of them are complementing the price direction. For example, let's say uh, the market is in an uptrend. So in that case, if the volume is also increasing and the open interest is also increasing, that means the uptrend is strong and the market will move further ahead in the up direction. So that was the whole point, right? Now summary of the volume and open interest. Let's summarize some of the more important elements of price, volume and open interest. Volume is used in all markets. Open interest mainly in futures. Okay. Only the total volume and open interest are used for futures. Increasing volume and open interest indicate that the current price trend will probably continue. Increasing volume, so the volume is also going up and open interest is also going up. The current price trend will probably continue. So if the volume is also increasing, open interest is also increasing. So in whatever direction the market is moving, it will continue, probably continue. It will continue in the same direction basically. Declining volume and open interest suggests that the price trend may be changing. Okay, it can happen in the upside and in the downside, or in bullish market or in the bearish market as well. Volume precedes price. Change in buying or selling pressure are often detected in volume before price. This is important. So changes can be observed in volume first, then it will reflect in prices. On balance volume, OBV, or some variation thereof, can be used more accurately measure the direction of volume pressure. So on balance volume will help us to identify in which direction the volume pressure is. Within an uptrend, a sudden leveling off or declining in open interest often warns of a change in trend. Then this applies only to futures. So basically, when the market is in uptrend and the volume or the open interest is started declining, that means the trend reversal is going to happen soon. That means the market that was in an uptrend, market जो ऊपर की तरफ जा रहा था, it will start moving in the downward direction, or it can happen after a little while. So that was the whole point of it. Hmm. Whoever is watching, if you are new to the live stream, make sure that you are liking the live stream if it is adding any value to your life. And also you can check out the channel if you are into stock market and trading. So we are learning this, and you can join me with my journey, and you can subscribe to the channel only and only if you have interest in stock market and finance or any related terms. That's what I'm going to cover in this particular channel. Okay. Volume precedes price. Changes in buying or selling pressure are often detected in volume prices. Okay, OBV also we understood. OBV is more accurate than the normal bars that is, telling us about the volume. Within an uptrend, a sudden leveling off or decline in open interest often warns of a change in trend. We already understood it. Very high open interest at market tops is dangerous and can intensify downward pressure. This applies only to futures. A build up in open interest during consolidation periods intensifies the ensuing breakout. This applies only to futures again. A build up in open interest during consolidation periods intensifies the consolidation period again, the trendless market or the sideways market. So basically, if in a sideways market or in a trendless market, the volume and the open interest is getting increased, that simply means the breakout is going to happen. It can be in the either direction. Okay, so it can be in the upside, it can be in the downside. So wait for the right entry. Increases a build up in open interest. Okay, we understood. Increases in volume and open interest help confirm the resolution of price patterns or any other significant chart developments that signals the beginning of a new trend. Okay, blow-offs and selling climax. One final situation not covered so far that deserves mention is the type of the dramatic market action that often takes place at the tops and bottoms. Blow-offs and selling climaxes. Okay, blow-offs occur at major market tops and selling climaxes at bottom. In futures, ओके ब्लो ऑफ मार्केट के टॉप पे होते हैं और सेलिंग बॉटम पे होती है. ओके, अंडरस्टूड. People who are new to the live stream, make sure that you are liking the live stream and also subscribing to the channel if you are into stock market and finance. So make sure that you are doing it. Okay. Blow-ups occur at the market tops and selling climaxes at bottoms. In futures, blow-ups are often accompanied by a drop in the open interest during the final rally. In the case of a blow-off at a market, prices suddenly begin to rally sharply after a long advance, accompanied by a large jump in trading activity and then peak abruptly. See figure 7.12. In a selling climax bottom, prices suddenly drop sharply on heavy trading activity and rebound as quickly. Figure 4.22c. So yeah, 4.12, 7.12. Let's understand it first. A couple of blow-ups stop. So these are the blow-off coffee blow-ups. Okay. A couple of blow-off tops in coffee futures. In both cases, prices rallied sharply on heavy volume. The negative warnings came from the decline in open interest. Okay, from this point the open interest is declining during both rallies. Okay, even though the market was showing a sharp peak, but in the same way it started coming down and it was reflected first in the open interest is what the author is trying to say. So this is the example of blow off that can happen at the market top, and the selling climax can happen in the market bottom. Commitment of traders report. Our treatment of open interest would not be complete without mentioning the commitments of traders COT report and how it is used by future technician as a forecasting tool. The report is released by the Commodity Futures Trading Commission CFTC twice a month, a mid-month report and one at month's end. The report breaks down the open interest numbers into three categories: large hedgers, large speculators and small traders. The large hedgers, also called commercials, use the future market primarily for hedging purposes. Large speculators include the large commodity funds who rely primarily on mechanical trend following systems. The final category of small traders includes the general public who trade in much smaller amounts. Okay, was the commercials. The guiding principle is in analyzing the commitment reports is the belief that the large commercial hedgers are usually right while the traders are usually wrong. That being the case, the idea is to place yourself in the same position as the hedgers and in the opposite position of the two categories of traders. For example, a bullish signal at a market bottom would occur when the commercials are heavily net long while the large and small traders are heavily net short. In a rising market, a warning signal of a possible top would take place when the large and small traders become heavily net long at the same time and the commercials are becoming heavily net short. So basically the summary is you have to go with the flow. You have to go in the direction of the commercials because they are generally right, and you have to identify it and you have to go in the direction of the commercial. That can increase the possibility of and probability of you winning in the market. Okay, commercials, big players generally. Okay, net trader positions. Okay, it is possible to chart the trends of the three market groups and to use those trends to spot extremes in their positions. One way to do that is to study the net trader position published in future chart published by Commodity Trend Service, PO Box 32309, Palm Beach Gardens, FL 33420. The charting, one thing about this book is, since this is written way earlier, so even though the concepts are still relevant, but the resources might not be relevant now. So you have to identify and you have to do little bit research and find out the new, what I can say, sources for doing the same things. Okay, so we'll generally not go very deep into these sources. You can check it out for the research purposes, but you can have, like, you have to find out the right sources which is relevant now. Having said that, the content, the concepts that is mentioned in this book is really important, and it is really relatable in current trading situation all over the world at present as well. So make sure that you are reading it in more and more detail. That's why it is still known as Bible of the trading, right? So yeah, the concepts are still relevant, the basics are still relevant. Okay, So for becoming a consistently profitable trader, this is the path we have to go for. The charting service plots three lines that show the net trader position for all three groups on a weekly price chart for each market going back 4 years. By providing 4 years of data, historical comparison are easily done. Nick Van, nice, the publisher of that chart service, looks for a situation where the commercials are at one extreme. And since I am covering this book in, let's say, in complete manner, so yeah, I'll read it out, but I'll not emphasize more on the sources or resources part. Nick Van Nice, the publisher of that chart system service, looks for a situation where the commercials are at one extreme and the two categories of traders are at the other. To find buying and selling opportunities as shown in figure 7.13 and 7.14, even if you don't use the COD report as a primary input in your trading decisions, it's not a bad idea to keep an eye on what these three groups are doing. Open interest in options. Now, so far we have discussed about futures and stocks when it comes to open interest. Now we are discussing it in options. So open interest in option, our coverage of open interest has concentrated on the future markets. Open interest plays an important role in options trading as well. Open interest figures are published each day for put and call option on future markets, stock averages, industry indexes, and individual stocks. While open interest in options may not be interpreted in exactly the same way as in futures, it tells us essentially the same thing: where the interest is and the liquidity is. Where the interest is and the liquidity. So that's what open interest tells us. Some option traders compare call option interest, bulls to put open interest bears in order to measure market sentiments. Okay, so they will compare both call and put open interest, and then they will decide where they want to move ahead. Others use option volume. Okay, makes sense. This weekly chart of S&P 500 futures shows three buy signals. See arrows. The line along the bottom show the commercials, solid line heavily net long, and the large speculators dashed line heavily net short at each buy signal. Okay, so from this point onwards, commercials bought and the prices move further up. Put slash call ratios. Volume figures for the options market are used essentially the same way as in futures and stocks. Hmm. Volume figures for the options market are used essentially the same way as in futures and stocks. That is, they tell us the degree of buying or selling pressure in a given market. Volume figures and option are broken down into call volume bullish and put volume bearish. By monitoring the volume in calls versus put, we are able to determine the degree bullishness or bearishness in a market. One of the primary uses of volume data in options trading is the construction of put slash call volume ratios. When option traders are bullish, call volume exceeds put volume and the put call ratio falls. Okay, this is very important, right? When option traders are bullish, so when the option traders are bullish, call volume will exceed. Since the option traders are bullish, so the call volume will exceed put volume and the put to call ratio. Obviously, if the denominator is bigger than the numerator, what will happen? In this case, the PE ratio will fall, right? It will decline. A bearish attitude is reflected in heavier put volume and higher put call ratio. Okay, if the PE ratio is going to be positive, then it will be a bearish sentiment because puts are more than the call, right? The put to call ratio is usually viewed as a contrary indicator. A very high ratio signals an oversold market. A very low ratio is a negative warning of an overbought market. Okay, high ratio signals an oversold market. A very low ratio is a negative warning of an overbought market. Alright. This weekly chart of copper futures shows three sell signals marked by the arrows. Each sell signal shows net long positions by the two categories of speculators and a net short position by the commercials. The commercials were right. Okay, commercials were right again. So from here they started selling, from this point also they started selling, and from this point also they started selling. and after they start selling, in each case the market falls down. So in this case the market fall down up to this level, and from this case also again the market fall down up to this level, and from this case also again the market fall down up to this level, right? So this is an example of how the commercials were right and how the open interest is also relatable in this scenario. Combine option sentiments with technicals. Option traders use open interest and volume put call figures to determine extreme in bullish or bearish sentiments. So option traders use both open interest and volume and put P ratio, PC ratio, put to call figures to determine extremes in bullish or bearish sentiments. These sentiments readings work best when combined with technical measures such as support, resistance, and the trend of the underlying market. Since timing is so crucial in option, most option traders are technically oriented. मेक सेंस. देखो यहाँ पे वही बताने की कोशिश कर रहे हैं कि जो आप वॉल्यूम, ओपन इंटरेस्ट और पुट टू कॉल फिगर्स देख रहे हो वो तो ठीक है, अगर आप इसको कॉम्प्लीमेंट करोगे किसके साथ, टेक्निकल मीजर्स के साथ, जैसे सपोर्ट और रेजिस्टेंस और उसके अलावा जो ट्रेंड है मार्केट का, वो सब भी सेम ही चीज़ बता रहे हैं या सेम ही चीज़ डायरेक्शन बता रहे हैं जैसा कि ये चीज़ें बता रही है ओपन इंटरेस्ट एंड वॉल्यूम. सो अगेन you might have a higher possibility to win or to get more profitable in this scenario, right? तो अगर ये सब एक ही चीज़ को इंडिकेट कर रहे हैं तो उस केस में विनिंग प्रोबेबिलिटीज़ बढ़ जाती है. अगर वॉल्यूम एंड ओपन इंटरेस्ट बढ़ रहा है और उसके अलावा जो सपोर्ट एंड रेजिस्टेंस है उस लेवल पे भी मार्केट इंपॉर्टेंट तरीके से बिहेव कर रहा है, तो अल्टीमेटली यहाँ से आपको एक स्ट्रॉन्ग सिग्नल मिलेगा. इट कैन बी ईदर साइड, in the upside and in the downside, depending on volume and open interest and the other technical features as well, right? So now, and trend of an underlying market, since timing is so crucial in option में हमको बताइए टाइमिंग बहुत ज़्यादा क्रूशियल होती है, राइट? सेकंड में ही आपका प्रॉफिट लॉस बहुत ज़्यादा हो सकता है. मोस्ट ऑप्शन ट्रेडर्स आर टेक्निकली ओरिएंटेड. सो ज़्यादातर जो ऑप्शन ट्रेडर्स हैं वो टेक्निकली ओरिएंटेड रहते हैं, यानी कि टेक्निकल चीज़ों को ज़्यादा फॉलो करते हैं, जैसे सपोर्ट, रेजिस्टेंस एंड जो ट्रेंड है वो मार्केट का उसको, क्योंकि टाइमिंग क्रूशियल होती है. ना सपोर्ट जो हमारे ये वाला चैप्टर है ना, वॉल्यूम एंड ओपन इंटरेस्ट, ये यहाँ पे हमारा कंप्लीट होता है. कंक्लूजन देख लेते हैं. That concludes our coverage of volume and open interest, at least for now. Volume analysis is used in all financial markets, futures, option and stocks. Open interest applies only to futures and options. But since futures and option are traded in on so many stock market vehicles, some understanding of how open interest works can be useful in all three financial arenas. In most of our discussion so far, we have concentrated on daily bar charts. The next step is to broaden our time horizon and to learn how to apply the tools we have learned to weekly and monthly charts in order to perform long range trend analysis. We'll accomplish that in the next chapter. So that ends our 7th chapter, which was volume and open interest. Now in the next chapter, which is the 8th chapter, we are going to talk about long term charts. And yes, we are at the end of this live stream. Also make sure that you are liking the live stream. अगर आपकी लाइफ में या ट्रेडिंग से रिलेटेड कुछ भी चीज़ें अगर आपकी लाइफ में ऐड ऑन हो रही हैं तो लाइक करो, एंड ऑल्सो सब्सक्राइब टू द चैनल इफ़ यू आर इनटू स्टॉक मार्केट एंड ट्रेडिंग एंड फाइनेंस इन एनी शॉर्ट. Okay, so in the next live stream we are going to start from the 8th chapter onwards. Today we completed the 7th chapter, which was all about volume and open interest. So on this positive note, let's just end the live session for now. We'll continue it very soon hopefully. And thank you so much viewers, thank you so much Radharanji, have fun, peace out. Make sure that you are liking the live stream and also subscribing to the channel if and only if you have interest in stock market, trading and finance. Have fun, peace out.